So guys, today we're gonna focus on asset disposal. I've created an adjustment here which needs to be what they require us to prepare. We require to prepare the general ledger account, which is an asset disposal account. Therefore, we generalize the information that we prepared from this ledger account. So the first thing that you have to do as an accountant or as an accounting student, you first have to check your financial period. When is your financial year ending? Here we can see what it is ending on the 31st of December. So the first thing that we're going to do, we're going to write the accounting period. It will start on 1 January 2016 up until December the 31st, same year, 2016. The months will be as follows. It will be January, February, March, April, May, June, July, August, September, October, November, and December. So we check the information that we have. We have an equipment at a cost price of 100,000, which was traded in for a new equipment worth 250,000. But now our focus, as we prepare the general ledger account, our focus is on the asset which is being disposed in the business. Again, so the accumulated depreciation at the beginning of the year was 40,000. An amount of 20,000 was received after they traded in. Again, let's see. We have the method that we are supposed to use in order to calculate the depreciation of the equipment. Now let's focus on the diminishing or the reducing balance method. This is the format of an asset disposal. Always, it will never change. The first thing that you have to keep in mind, on the debit side, it will only be one amount, which is the cost price. And we must remember the aims of preparing the asset disposal. The main aim is to get the profit or the loss. That's the first aim. Secondly, if you're preparing a statement of financial position, you are looking for the carrying value, the disposal at carrying value, which is built by two amounts. Always, it will be the cost price subtracting accumulated depreciation. Reason being, the carrying value is made up of the cost price of an asset subtracting the accumulated depreciation on that asset. So now, let's pay attention on this one. For you to get the profit, and again, as a business, this is where you buy your asset. This is where you buy your asset. This is where you sell it on the credit side. If you find the amount on the credit side bigger than the debit, you have the profit. If the credit side is less, that means you're going to obtain a loss. So now let's test the question that we had here. Let's prepare an asset disposal for this question. We open a ledger account, debit and credit. Don't forget, I said the cost price here, which means here you are preparing for what? Asset disposal. Asset disposal. You are preparing an asset disposal for equipment. The cost here. We have equipment at the cost price of 100,000. We write it here. Now, coming to accumulated depreciation for this equipment, it will always be made out of two amounts. Firstly, it will be the accumulated depreciation at the beginning of the year. When the year starts, sometimes they will give you the accumulated depreciation. Mara, if you are using the cost price method for calculation of depreciation, they might not give you. They might expect you to calculate it by yourself, but we'll see that maybe on another session that I will do. So here, it will always be made up of two amounts. It will be accumulated depreciation at the beginning plus the depreciation that we're going to calculate for the current year. Let's see. On the information that we were given, the accumulated depreciation of this asset at the beginning of the year was 40,000. We replace it here. 40,000. It is the first amount. It's not the final amount. Let's remember it's at the beginning. We must look for depreciation for this asset. Ne? The diminishing balance method or the reducing balance method is as follows. For you to get the depreciation, on this asset, the method will have to be cost price minus accumulated depreciation, multiply it by the percentage, and then you multiply it by the period. Let's see. On this information, we know the cost price is 100,000. We replace it. 100,000 subtract. You subtract the accumulated depreciation, 40,000. You multiply this by 20%. We're using 20% times 20%. Now we focus on the period. When did this asset leave the business? The asset was traded in on, my bad, it has to be 2016. Ne? The asset was traded in on 28 February 2016. Ne? Let's see. From the accounting period, at the beginning of the year, we had an accumulated depreciation of 40,000. Ne? We are looking for the depreciation of this asset for the current year. Let's see. We have 12 months for the whole year, but the asset was only in the business for 2 months, as you can see. It will only be for January and February. Here, the asset was sold. This asset is no longer applicable here. From March until December, it is not there. Ne? Let's see. So the period is going to be, we multiply it by 2 out of 12. Ne? So if we calculate it, we're going to say 100,000 subtract 40,000. Since if you're using a financial maths calculator, don't say times 20% because it's gonna give you a wrong answer. Ne? If you say after subtracting 40,000, if you say equal sign, you're gonna get how much? 60,000. Ne? This 60,000 now, you multiply it by 20%, you multiply it by 2 out of 12. If you multiply here by 20% and then you multiply it by 2 out of 12, we're gonna get the depreciation as 2,000. Ne? So addition of this 2, addition of the accumulated depreciation at the beginning plus the depreciation, it gives you the full accumulated depreciation where the asset was sold. So we're going to find it as 42,000. Okay. Thirdly, we want to record what we call the manner. This is the way the asset was taken out of the business. Let's not forget what the manner can be. The asset was sold. It can be sold with cash. If you sold it with cash, we're going to talk about bank because of the money. We're receiving money in the business. If it was on credit, we're going to talk about debtors control, since we sold this asset on credit to someone. If we donated the asset, okay, let me talk about the profit and loss first. You can't have a profit if you donated the asset. You get the profit only if you sell with cash or you sell on credit only. So the manner can be the owner took the asset. It can be drawings. We donated the asset. It will be donations. The asset was stolen. Agree, in the world, this kind of things happens. They might steal the asset. If it is stolen, we still have to prepare asset disposal, but we can have the profit or loss since we did not sell the asset. So on our question here, this asset, okay, they're telling us an amount of 20,000 was received. You can see what this asset was sold with cash. So the manner here is going to be bank 20,000. Now let's check the profit or the loss on the sale of the asset. By the way, I said this is where you sell, this is where you buy. Ne? If where you bought the asset with 100,000, but after the selling, let's check how much is 20,000 plus 42,000. We're gonna find it as 62,000. Ne? So let's check. You have 42,000 plus 20,000 is gonna be 62,000. Ne? Where you sold, you found out you only obtained 62,000, but when you bought, it was 100,000, which means we obtained a loss on sale of asset, which will be minus 100,000 The loss will be 38,000. Yeah, 38, no zero. Yeah. So since it's a loss, we are done with asset disposal. If they ask you to prepare the profit or loss, you're gonna have to take this amount to the expenses. In terms of financial position, it's gonna be this one and this one. This minus this, it will be your disposal at carrying value. So to cut things short, we're now gonna generalize this information. Okay. The first journal entry, we can talk about the loss. We've told the loss cycle, and a loss is an expense. We're gonna talk about a loss on sale of asset. Corresponding account is asset disposal. The second account is gonna be asset disposal. Debit and credit. We obtained a loss of 38,000. Even here, 38,000. You credit asset disposal because from the large account it was credited with the amount. Let's go to the second one. We know the asset was taken out of the business. Before that, the asset, when the asset was bought, it was an asset here, like it was equipment. On the debit side, you recorded this amount. So now it is being taken out. We're gonna talk about equipment that you bought of how much? 100,000. Then you credit asset disposal. You credit asset disposal with the corresponding amount. So again, we calculate depreciation for the year. This is an expense. You're gonna have depreciation. The corresponding account for depreciation will be accumulated depreciation on equipment. You're gonna talk about the 2,000 that you calculated. This is the depreciation that we're talking about. You're gonna be 2,000 here and 2,000 here. 2,000 here. Again, we have an account of let me see. Oh, we received cash. Not forgetting cash. You have the bank account now. Bank 20,000 and asset disposal 20,000. Not forgetting what this asset, they can also call it the realization account. So the name doesn't matter. What matters for at the end, how much was your profit or your loss on the sale of the asset, and what is your disposal at carrying value here. Okay. The other one, let me see if there will still be any other account. We talked about equipment. Oh, it had an accumulated depreciation in this one. No, currently there is no entry there. So I now believe this will be the end of the video. So guys, always whenever you're preparing anything in accounting, any asset, firstly check the accounting period, please. Check the accounting period. This one is important. And again, the date. When you talk about the date of an asset, the date the asset was sold, let's check the month, not just the month, the date here. Sometimes we do the 1st of February, which means the asset was only in the business for, if this asset was sold on the 1st of January, not the 28th, this asset was gonna be in the business for only the month of January. That's all about the asset disposal, guys. Please comment, share, and subscribe. Peace and love.